our experts will be able to help you better. Today on the show, we have Rajesh Agarwal, who's joining us up front to talk about fundamentals of the market and also to talk about the stocks that you need to watch out for. Take note of your queries actually in trade. Rajesh, very good morning to you. Thank you so much for being part of the show. Let me take the first query to you. We have two queries coming in on one particular counter, and that is Yes Bank. One is from Venu, who's a senior citizen from Chennai. He wants to know if Yes Bank, is it a buy or a hold at current levels? The other one is coming in from Nagakumar. He has about 10,000 shares of Yes Bank at 20 rupees per share. After hearing that big stake sale purchased by Sumitomo Mitsui, he wants to know whether it can be a multi-bagger in the next 3 years, and can he go ahead and add this one in the portfolio? What's your take, Rajesh? Actually, his buy price is pretty attractive. It looks like he's just bought after the stake sale announcement had come in for Yes Bank. But this one has not performed well. Every time you thought things would change for the better, this diamond has not actually seen that sheen for years.
Good morning, Sahil. Good morning, Ankur. You said it right. It has done nothing on the forces, I would say. The market cap has not moved much, despite the fact that in the past few quarters, we have seen the numbers being improved, the asset quality being improved, margins improved. But the only problem is the faith that has been lost and the kind of balance sheet depreciation which has been taken and hit by years back. And with this stake sale, we think things are going to be better in the near future. Uh, Multi-bagger can't say at this point of time because we have to watch out for quarterly performance, quarter on quarter, and then we can say that if it keeps on performing, that we can take a call. But at this point of time, it's a hold. Based on the fact that the numbers have been improving and we believe that it will improve further. It might correct some out from these levels due to technically resistance levels or you have buy on rumor, sell out news kind of thing. But still, for long-term horizon, maybe from the next 6 to 9 months, we foresee a price target of around 27, 28 in this. So it's a hold from the our side at this point of time. I would like to add that this is a risky bet. One should only consider if your risk appetite is good enough.
Right. Next query coming in on the stocks IRFC and PFC, where they want to know that whether or not 100 more shares needs to be added, and they already have 445. I mean, they have bought it at 160 is IRFC price, and 445 is the price of PFC. Remember, PFC is yet to declare the earnings, which is expected this week. What will you advise, Rajesh, on the IRFC and PFC?
See, both are a hold at this point of time, taking one by one. From Friday, since Friday onward, we have seen a lot of movement coming in railway stocks. There have been no fundamental change as such in the last fortnight or so, but still from Friday onward, there is a lot of been buying in the entire railway pack. There may be a certain reason because from in the entire 2024, we have seen massive consolidation and correction in railway stocks. Some of them have fallen by around 40-50%. So it must be value buying coming at bottom levels. But one thing remains, the fact remains that the government is keen on improving railway infrastructure. And I have seen traveling a lot of places that railway infrastructure is going up like anything. So IRFC being a financing company for railways is in a good spot. One can accumulate this stock, but I would say wait for a target of 120, 125 for new purchases. Whatever you are holding, continue to hold. As far as PFC is concerned, the balance sheet has been cleared. NIMs have been improving. The kind of focus of government on power sector is good news for PFC, REC, Radar, these kind of companies. So one can continue to hold. It's trading on a decent valuation, I would say 5, 6, 7 times PE. Good dividend yield, and we expect some kind of dividend announcement in with this result also. So both are a hold from our side.
That's the take coming on IRFC as well as PFC. Rajesh, you're going to be on a marathon for a while because we will have a technical guest joining us in a short while from now. But before that, let me ask you about the most talked about sector and that is the defense space. I have a couple of queries, but let me take first query that I have on Bharat Dynamics. Shaurya is writing to us from Gurgaon. He has Bharat Dynamics at a price of 1,403 rupees per share. He is no doubt looking for a short-term view on Bharat Dynamics, and in the short term is done spectacular, 70% up move coming in, and also a lot of other triggers also aided or kind of got that sort of an interest back into the defense sector as well, given the fact that the hostilities, geopolitical concerns that we've seen. What do you think is the road ahead when you talk about Bharat Dynamics in particular?
See, not only Bharat Dynamics, but the entire defense space is looking good. There are various reasons for this. One, they have corrected quite a lot in the recent past because of various reasons. The valuations were high, the orders were not being executed, and they have run up quite a lot. And we have seen some of them correcting by around 40-50%. What happened after Operation Sindoor was people were again attracted towards defense stocks. Not only India, now it's expected that even international orders would be coming in. So the long-term story remains good, no doubt on that. Somebody looking for a time horizon of 2 years, 3 years down the line, these are good value buys at this point of time because of the kind of geopolitical tensions going on around the world. And people, almost all governments are going to spend on defense. But the fact remains in the last 15, 20 days, the kind of run-up these stocks have taken, I wouldn't be surprised if some kind of consolidation or correction takes place in between. So for a short term, be very cautious, put a strict stop loss. But for a medium to long term, we have a buy call in several of them like Bharat Dynamics or IHA, even BEL, BEML are good buys from our side.
Right, that's the view coming in not only that stock but the defense sector. Next query is from Shailendra Singh and from Bhubaneswar. He wants to know about Torrent Power. Recently, you would have seen there is renewed queries on the power sector per se because the summer season has also started and there are eyes whether or not there will be demand which will be increased. But what happens to Torrent Power? He has in his portfolio at the price of 1100. What will you advise, Rajesh?
I would advise a hold at this level. Maybe a new buy can be considered around 1300 rupees. Strong company, good capacity. Numbers were very good in the last few quarters. And I think going forward, it can touch around 1700, 1800 odd rupees in the next 12 months, 18 to 24 months. So one should continue to hold and any dip should be taken as an opportunity to add.
The take coming in on Torrent Power. Any dip should be taken as opportunity to go ahead and buy this one. This one is coming. The next query that I have is coming from Mohan. He's writing to us from Odisha, and he's mentioned that he's a retired government employee as well. And he has 400 shares of Bajaj Housing Finance at a price of 162 rupees per share. He got it at the IPO. Rajesh, what's your take on Bajaj Housing Finance? Do you think that it's a good one to stay put with, given the fact that it comes from the stable of Bajaj?
On the contrary, I would say it's a buy from our side. I would rather say that. We have seen multifold growth in the loan book and profitability the last 6 years of its operation. That is commendable. It's the second largest player in housing finance, well-diversified product, strong parentage group ecosystem to support their growth. Everything is in their favor. Even the recent quarter numbers have been very good. For full year, the bottom line went up by around 25%, if I'm not wrong. So things are very good for this. Even AUM had expanded to 1,14,000 odd crores. So it's a buy from our side. We have initiated a coverage on this and recommended our clients to buy.
Next question coming in from Bengaluru. Sri asked whether or not he should sell off his quantities in BEL. He already has 1000 shares and the price which he bought was 330. He has a short-term view. What will you advise? He should stay put in this stock or he needs to get out?
See, as I said in my discussion just now that for defense, we are very bullish for long term. For Bharat Electronics, a buy from a side, good order book and everything. But since you are looking for a short-term view, short-term, it's a run-up quite a lot in the last 10, 15 days. It would be prudent to at least book partial profit in this and re-enter at lower levels.
Your short-term 1 to 3 months target, if you can give on the same?
See, in 3 months target, I would say around 390, 400 odd rupees to be max.
All right, so that's the take coming in on Bharat Electronics. And given the fact that all of these defense counters are on a tear, you have, I think, consensus buy call coming in for all the stocks coming from Rajesh on that particular note. But let me take this next query coming from Sangeeta. And she's asking you a very tough question. I believe it would be tough, but maybe it will be very easy for you, Rajesh, given the fact that wants to know for the longer term. She has three four-wheeler major companies that she's looking at. Tata Motors, Mahindra & Mahindra and Hyundai. Which one do you think that she should pick and look to invest in at this point in time? But one of the bigger caveat is that this sector has not been performing well. The auto sales numbers have not been great. Hyundai's earnings also have not been that enthusing either. And tariff tensions and tariff talks are the ones that are also impacting parent company of Hyundai as well as Tata Motors. What's your take now?
Yeah, I agree to you that tariff concerns are there. But I really feel that these are short-term tensions. Maybe in the longer term, these things will be taken care of. So short-term, yes, there might be volatility due to numbers, tariffs, and other things. But in fourth year, we have our top picks is Maruti Suzuki. But since out of these three, I have to choose one, I will go with Hyundai. Not because the other two are bad. But taking one by one, Mahindra & Mahindra numbers have been very good. It has run up quite a lot. So one should wait for some correction to enter into that. Tata Motors, we have seen slowing down in numbers, especially in the EV space, or the GLR is looking good. So that can also be considered to buy in dips, I would say. But Hyundai, on valuation parameters, I think it's doing very well. It has been expanding so good. In the SUV market, Creta is doing very well. Its EV, Creta EV has been taken very well by the market. There has been good demand, and they are going for an expansion also. And after the IPO, it has not done anything. So I think with the kind of brand, with the kind of market reach in the SUV market, I think
Rajesh, I just wanted to.
Of these three, I would say.
I just wanted to come in there. So, given the fact that Creta EV segment has done well, is that what you're driving these days?
See, I have a Creta with me, no doubt on that. And let me be very frank, I have been a Hyundai lover from day one. The first car I had was i10, then i20, and now Creta. So that may be my personal choices, I would say. But Hyundai on valuation parameters also looks good. I've not gone for EV Creta, and still I am going to change that Creta which I am holding to again a ICE Creta only.
All right. So if you upgrade, it's going to be Creta only. You can also give a shot for Alcazar, isn't it?
Let's see how it pans out. But my preference is always with the Creta, I would say.
What about
at this
you?
Point of time.
What about you, uncle? What are you driving these days? No preferences?
I'm still driving Honda. That continues.
That continues, Honda. Someone asked me, what am I driving these days apart from traveling by local train?
No, I know. You must be riding JLR, I would say.
No, you should shift to either Audi or Merc now.
Oh, audio mode. Right from Western Railway, I will try and consider these options. Why not? Sure. Thank you.
Right, moving on from auto to FMCG now, because next query, actually a common query from two of the guests who has asked. Matthew is asking about Varun Beverages, and so as OSN Reddy from Hyderabad, Mr. Reddy has 200 share of Varun Beverages at 525, while Matthew wants to know about Varun Beverages and also CG Power. So can you give a view on both of them, because while OSN Reddy has disclosed his buy price, we don't know about Matthew, but your view now on Varun Beverages as well as CG Power?
See, CG Power is a strong company, run up quite a lot. One should wait for corrections to enter into that. It's doing very well, especially in the FMEG space. That's fast moving electronic goods. The fans and the mixer grinders are the market leaders, I would say. A whole lot of distributors with them. The numbers have been pretty good. So it's a buy on dips kind of strategy on CG Power, and somebody can continue to hold. As far as Varun Beverages is concerned, it's one of the largest Pepsi bottler out of the US, and not only in India, but they have operations into Nepal, Sri Lanka, and other neighboring countries. They're doing very well, not only in carbonated but non-carbonated drinks also. Uh, the expanding into new markets, and the kind of summer we have seen the last 1 or 2 months, and expecting more heat to continue. I think this company is going to get good numbers in the next quarter. So it's a hold for both of them and buyout them.
All right, so that's the take coming in for Varun Beverages as well as CG Power. If you're holding, hold, otherwise buy on tips. But on that note, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, continue taking your queries. Don't go anywhere.
Co-powered by Dulux.
As well with me on the show, and along with us in the show we have Rajesh Agarwal, who's taking all of his stock related queries. And let's continue with the queries then. And the next query that I have is coming in from our viewer Priyanka Rao, who's writing to us from Hyderabad, wants to know about transformers and rectifiers, about 800 shares at a price of 620 rupees per share, and persistent systems 110 shares at a price of 5,992. Currently, she's in loss in these counters. Rajesh, what's your advice? Do you think that both of these players in their respective sectors are formidable players, and therefore one should actually take a look at them for the longer term and not actually gauge with what happens in the near or the medium term?
See, IT as a fact has been under pressure for quite some time since, I would say, Mr. Trump took his office. And they are continuing to do badly in the near future, maybe in the next 1 or 2 quarters. As far as Persistent is concerned, that's a good company into product software and all. Have been doing very well in the recent past. But depending on the kind of order flows from their clients, it depends on how the next 2-3 quarter numbers come out, and that would be needed to first. What I would say at this point of time, the top-end stocks like Infosys or TCS looks better placed than Persistent. So if the gentleman is comfortable, one can switch to Infosys or TCS. And the other one, transformer and rectifier, that's doing very well. We are very bullish on power sector, and it's going to do well. But as far as trail, that's transfer and rectifier is concerned, the volumes are very low and the balance sheet size is very small. It would be better to switch to some large cap or other names like maybe a Tata Power, Calcutta Electric, CESC. That would be better to switch to, although they are into different space, but they are into the entire power sector, I would say. So switch is, I can advise at this point of time from both these stocks.
Right. Another question coming in on tech giant TCS. Ramesh from Bengaluru is asking whether or not he should stay in stock. His buying price is 3599. So slight loss which he is incurring right now. What will you advise?
See, if your time horizon is at least 1 year, continue to hold. We don't think that these tariff problems or slowdown in US is going to continue for a very long period of time. Things would look better. Individual level, so the balance sheet is very strong. Order flows has been reasonable, I would say. The numbers have been good. Continue to hold.
Coming in on TCS. Let me take this next query then. We have a couple of them actually pouring in. This next one that I have is coming in from Ramesh, who's a senior citizen. He's writing to us from Hyderabad. He's a long-term investor as well. He has 50 shares of United Spirits at a price of around 643 rupees per share. What's the long-term prospect of the company? Should he go ahead and book profits or continue to hold on to it? And what a spectacular buy price actually coming in for our viewers, 643 for United Spirits. And I don't think it was that long ago that it was actually hovering at those prices. If I could request my producer Somashri to actually show the line graph of a year or two for United Spirits, and I believe that is two-year sort of a chart coming in for United Spirits. And this one has only seen one way, and that is up, right? Given the fact that consumption patterns also is one of the primary reason why all these Alcobev stocks have done well, and actually quality Alcobev stocks that have done well, Rajesh.
Yes, I agree to that. Consumption has gone up, quality stocks have done well, be it United Spirits, be it Redigo, Kethan and others. And I still think that a lot of steam left into these stocks. The numbers have been improving. They are large distribution space, good brands, continue to.
Next question is also from Bengaluru, and Ramu is asking whether or not he should continue to hold L&T. Now he has bought at the price of 3180, and I actually like the question. He is saying whether he should maximize profit or to book profit right now.
On the contrary, I would say if your funds allow, add to it. The numbers have been very strong. More than 5 trillion order book. New orders pouring in every quarters. Into new space like hydrogen and other things, they are doing very well. And a large chunk of their order comes from Middle East. That's one of the positive points. If you believe in Indian economics, Indian economy, I think L&T is a proxy play to that. So it's a buy from our side. At these levels too, we would say it's a buy.
That's the take coming in on L&T. It's a buy call coming in from Rajesh for L&T, given the fact that yes, it is a major player in infra in India, not just in India, globally as well. There's a lot of contribution coming in for their revenues. This next query that I have is coming in from two of our viewers. One is from Augustin. The other one's name I have missed, I believe. Bank of Maharashtra is the stock that the query is on. 120 shares. One viewer has bought it at the price of 47 odd rupees. The other one has bought it at around 50 odd rupees per share. What's your take coming in on Bank of Maharashtra? Rajesh, a lot of interest actually coming in on Bank of Maharashtra, given the fact the way how it's been growing, also the way how their asset quality has been maintained, the branch expansion as well, and maybe if Ankur want to come in, given the fact you track Bank of Maharashtra so closely.
Yes, actually Bank of Maharashtra is one stock where you would have seen NPA problem to turn around.
Yeah.
So in that scenario, yes, turnaround has happened ever since new CEO has taken over. There has been non-core assets which has been finalized. There has been a sale of NPAs as well. So that problem they have almost sorted out, and loan growth is coming. That is the important thing to watch.
Yes. So do you concur with all of these points, and would you recommend our viewer to stay put with Bank of Maharashtra, Rajesh, or what's your take on it? Do you have a contra view on Bank of Maharashtra?
In fact, Cyril, we have been recommending this stock for the last maybe 2 years or so. And it has run up to almost 70 odd rupees after that due to market conditions, it fallen back. If you look at numbers, not only this quarter, but last 3-4 quarters, the number has been pretty impressive. I would say it is better than the entire PSU basket in the banking space, I would say, in all parameters. Be it deposit growth, be it advances, be it asset quality, NIMs have improved. They're going for fundraising. The capital adequacy ratio is impressive. On every parameter, the bank is doing very well, and it's a buy from a side if somebody is having a horizon of 12 to 18 months. So I would say if the funds allow, add to it, or otherwise you can continue to hold.
Right. Next question is coming from a senior citizen who has specifically mentioned that he watches buy now, sell now very closely. And thank you for that. He's holding Garden Reach at 100 shares he has at 935. Kindly advise what he should do.
You have purchased a very attractive price, I would say. I don't believe that that price is going to come soon in the near. So you are very comfortable at your buying price. Continue to hold. After the kind of geopolitical tension, not only across the world, but also what we have witnessed from India, Pakistan, seeing that Operation Sindhu, I think these companies are going to do extremely well in the next 2 years. Continue to.
All right, so that is Garden Reach. Continue to hold on to it for the next 2 years because the buy price is also pretty attractive. Next query is coming in from Shankar from Tuticorin. 200 shares of KPIT Tech at a price of 1,483 rupees per share. He's been holding on to this for the last 1 year. And his query is very interesting. He wants to exit the stock in the next 1 month. What's your take, Rajesh? Do you think it makes sense?
See, you are trying to exit in next 1 month. You must be having reasons for that. So don't wait for 1 month. Get out because market is in a good mood. You never know when the tide turns. So if it's a very short-term thing, that's 1 month. I would say book out. Otherwise, for long term, it's a good play. The auto is doing very well in the auto space, I would say. So there are only two companies in this space, KPIT and Tata Technology, and both are doing well. When we are bullish on auto, I think these companies are going to do well in longer term. But since you have a 1 month horizon, I would say book out, don't go it for 1 month.
All right, so then that's the take coming in on KPIT Tech. But on that note, thank you so much, Rajesh, for being part of the show, for taking as many queries as we could squeeze in, because at the next leg, we will take queries to a technical guest. Thank you so much for being part of the show. But on that note, we slip into a break on this edition of Buy Now, Sell Now. When we come back, continue taking your queries to our technical guest. Don't go anywhere.
पैसा लगाना है तो सेंचुरी क्लब प्राइम पे लगाओ, डूबेगा नहीं।
Welcome back after the break. You're watching Buy Now, Sell Now with me, Ankur Mishra and Cheryl D'Souza. Let's see how markets are faring after a flip-flop since morning. Now comfortably into the red. Nifty, you can see 47 points down. Similarly, Sensex down 206 points. Where is this coming from? Eternal is down 3%, Hero Moto 1.7%, followed by Cipla, HDFC Bank, both down more than 1%. But if you talk about Nifty gainers, Coal India is leading the pack with 3%, ONGC 2%, Tata Steel 1%, and followed by NTPC and Dr. Reddy's, both up around 1%. The advanced decline ratio is actually neck to neck. 1,290 shares in green and 1,330 in red if you talk about NSE shares.
Absolutely. So that's the way how the markets are looking like at this point in time, given the fact that in the last 1 hour or half an hour or so, we've actually seen the markets see a decisive move towards the downside. Let's also take a look at what Bharti Airtel is doing at this point, because you have Bharti Airtel and Google. They've partnered to offer Google One subscription to customers. Also, that's one of the reasons why the stock will be in focus, is doing absolutely nothing with the rest of the market. We have Jatin Geria, who is joining us now on the technicals. Jatin is joining us from Mirae Asset Share Khan. And also in a short while from now, we'll also have Rajesh Agarwal joining us back again on the show. Thank you so much, Jatin, for being a part of the show. Let me start taking the queries to you then. A lot of technical queries also have been pouring in of late. And we have this query coming in from Kumar, who's writing to us from Bangalore. He wants to know about Tourism Finance Corporation of India, a PSU counter. At current price, do you think it makes sense to go ahead and buy this one?
Yeah, see, in the case of tourism finance, the stock has been consolidating between 190 and 215 of late. So we believe that this consolidation is likely to break out on the upside. However, the price structure does not indicate an immediate breakout. So I would suggest to wait as of now, by only about 215 in the case of tourism finance. Currently, you should avoid it.
Right. Next query is a query of actually many viewers who bought LIC when the IPO came, and A. Nedu Chazian from Bengaluru is asking that he has 97 shares of LIC which was allotted in IPO actually. Now what should he do? First I want to understand from Rajesh, if you can give your view. Okay, he will be joining in a while, but Jatin, what can you advise?
Yeah, see, in the case of LIC Finance, I think the stock has reversed from downtrend to uptrend, and we are expecting levels of 905 to 910 in the short term. So I think those who have already, holding on to the stock, we should continue to hold on. I would suggest to keep a trailing stop loss of 850 for the long positions. I think until and unless 850 is held, the stock has a potential to rise towards 900 to 905. So continue to hold longs with an stop loss at 850.
On LIC, once you have Rajesh, we'll take a fundamental view on LIC from him as well. This one is coming in from Ignatius, Kolkata now. He wants to know about CDSL. He has 50 shares of CDSL at a price of 989 rupees per share. He's been holding for over a year or so. Jatin, do you think he should go ahead and book profits in this one, or stay put with this, or add some more in his portfolio, given the fact that CDSL is also a niche player when you talk about the capital market play? No doubt you have NSDL also that's going to come up with the IPO. What's your take on CDSL?
Yeah, see, in the case of CDSL, partial profit booking is definitely advised because the recent run up has been from 1200 to 1500 odd levels. So, partial profit booking is advised, and one should keep a trailing stop loss of 1425 for his remaining positions. On the upside, I am expecting levels of 1550 to 1560 in the near term. So, book partial profits and hold remaining for targets of 1540 to 1560 on the upside.
Right. Rajesh is back with us and thanks for staying by. I want to know about LIC, a stock which has been asked by many viewers. Those actually got allotted in the IPO. What should one do in LIC now?
Horizon, why? Market leader in insurance space, almost 60-70% market share. The AUM is almost even larger than the entire AUM of the mutual fund industry. They're doing very well, launching new products that's more into profitability side, focus on margin. With the two new MDs coming in, I think things are going to look better into this. A lot of value hidden into this. We have a target of around 1100, 1200 odd in the next 2 years. So what's a buy from a side? One of the best stocks in the entire insurance space.
We have Rajesh back. Apologies, Rajesh. Just a tad bit of miscommunication. That's the reason why I thanked you before going to break. But at least, hopefully, you got enough time to go ahead, at least sip on that water that you were. Because given the fact that it was like breathless streak for you answering all the stock-related queries. Now we have Jatin also on board. Let me take this next query. For a combo view, Ayush from Dehradun is writing to us, want to know about Siemens, 50 shares at a price of 3,000 rupees per share. He wants to know a short-term as well as a long-term view. For short-term, first, let me come to you, Jatin, to get your view on Siemens. How's this one looking to you, given the fact that there has been a lot of corporate action happening on this one? So how should one gauge the stock? And post that, I will come to you, Rajesh, to help understand how should one now analyze Siemens. Jatin, first you.
Yeah, see, in the case of Siemens, the stock had multiple resistances around the 3040 to 3080 mark. But now I think it's comfortably trading above that resistance zone. And the momentum is also on the buy side. So I am expecting this rally to continue in the case of Siemens. On the upside, 3430, 3450 is the level or the next resistance zone that I can see on the daily chart. So I think this rally has much more room of around 200 to 250 points on the upside, even from current levels. And the support for the stock is placed around 3050, 3040. So yes, that's a decent amount of risk reward, favorable risk reward that the stock provides at current levels. So continue to hold for target of 3430 on the upside.
Right, so that's the technical view coming in on Siemens. What's your take on the fundamentals, Rajesh? How should one gauge it? Because you had the corporate action happening, you had the demerger also of the entity, the Siemens Energy business as well. Globally, also a lot happening when you talk about the company, corporate restructuring also impacting the company back here in India. How should one gauge it, given the fact that it is a very big, formidable player in its own segment?
See, you said it right. So one of the big formidable player in this segment doing very well. And just a matter of time when private capex start taking place. So these capital goods players are going to do well in the next 12 to 18 months or maybe 24 months. Somebody having that kind of time horizon can continue to hold. By any chance, it falls to around 2800, 2700, that would be a good adding point. Uh, I think after the corporate action, the company is more focused in its space and it's a good time to accumulate this stock on depth.
Right. Next question is coming in on IDFC First. Actually, two stocks Samit wants to know. IDFC First as well as KNR Construction First. Let's address IDFC First. Rajesh, how do you see this stock in next 1 to 2 years?
I don't find any reason to believe that this stock is going anywhere in the next 1 2 years from the same levels, maybe plus minus 10%. That's what we perceive. And we have recommended our clients to book out at these levels because, as we all know, that all the positives has already been discounted, huge equity base. The bank is showing turnaround with under new management. They have started giving good numbers and apps have improved. But the fact remains valuation has been optimized. And at these levels, I don't see much of a upside from current levels. Maybe because of market condition, it can go to 78, 72 odd rupees. But it would be prudent to book up.
Right. Also, news coming in for IDFC First today that shareholders have rejected one of the board seat which was supposed to be given to Warburg Pincus arm. But Jatin, on a technical level, where do you see this stock going? Right now, it is trading around 68.
See, in the case of IDFC First Bank, there are multiple resistances in the zone of 73 and 74, and the momentum in the recent run-up has created a negative divergence. So there is a lot of, you can say, loss of momentum on the upside. Buying interest is not visible. 70 it's unable to surpass the 70 odd level. So I think. The momentum is quite uh, at not there at the current levels. I am expecting a dip towards 65 to even 62 levels in the short term. So yeah, current levels are good levels to book out the existing long positions.
So that's the advice coming in for IDFC First Bank. But on KNR construction, what is your view, Jatin? Do you think these levels will hold?
Yeah, see, in the case of KNR constructions, I think around that level of 248 to 252, there are multiple swing highs that created fresh round of selling pressure. So until and unless this zone of 248 to 252 is not decisively breached on the upside, I would not rather go long on KNR construction. If it sustains above that, then the trend reverses. But as of now, the trend is negative until and unless 248 to 250 zone is not breached on the upside. So fresh long positions should definitely be avoided. Those who are holding can continue to hold with a trailing stop loss placed around 230 odd levels.
Rajesh, you hold a similar view on KNR construction, whether one should hold or not?
Yeah, I totally concur with Jatin's view that one should try to get out of this stock at these levels because I think whatever positives have been already been discounted, rather uh, the valuations are on optimal front. The fact remains the order book is good, doing very well, but then the valuations are on the higher side. It would be prudent to out at these levels.
All right, so that's the take coming on IDFC First Bank as well as KNR Constructions. Let me take this next question. This one is coming in from Arunachalam, Balaji, who's writing to us from Tamil Nadu. He is a senior citizen. He has IOB in his portfolio, Jatin. 6,000 shares at an average price of around 43 rupees per share. He's saying yesterday it touched around 40 rupees per share levels. Today it is actually sub those levels. Do you think that... or he wants to know by when will his stock actually reach the buy price, around 40 or 43 or so. By when do you think the stock will surpass those levels?
See, last trading session, and we saw some spot in this PSU bank basket. But overall, if I see the little long-term charts of Indian Overseas Bank, the charts are not encouraging, and I suggest that the trader or investor should consider booking out from IOB and switch to some quality names like Bank of Baroda, or even for that matter, State Bank of India is a better choice in the PSU basket space. Indian Overseas Bank, I think the trend is negative. It has been relatively underperforming the market and the PSU banking stock sectoral index. So I think you should book out Indian Overseas Bank and switch to something like a Bank of Baroda or State Bank of India.
Question is coming in from Krish, and he wants to ask a specific question to Jatin regarding Trent. His buy price is 4750. He is holding 50 quantity currently. What should he do? And he wants to know long-term outlook on this stock.
See, in the case of Trent, I believe that the stock has formed a near-term bottom at 4,500. I think post this result announcement, there was a panic reaction on the downside, and the panic bottom was created around 4,500. So from those odd levels, it has rallied around 1,000 odd rupees. But I still believe that there is more room for the stock to travel towards 6,000, 6,100. The up move is likely to be very slow because there are multiple resistances on the way up. But I think over a period of a couple of weeks or say a month, I think the stock is headed towards 6,000 in the short term. So continue to hold on with a trailing stop loss at 50 to 30 in the case of trend.
Krish also wants to know the long-term view on that, and another part of the question is whether or not he should add to current holding at the level where it is trading right now. Rajesh, what is your view on trend?
See, for long term, we think the stock is very attractive. No doubt on that. The value retail marketing of Zudio is doing very well. They have expanded the number of stores. Uh, the margins have been improving. But at these levels, I think some amount of consolidation or profit booking is quite possible. So 5,200, 5,000 odd levels would be a good entry point. Somebody holding can continue to for the next 12 to 18 months, the stock looks good.
You know, Rajesh, when as a viewer or as a consumer, what happens is you tend to also gauge these companies, not unless you have a good financial backing and you are a background, as in backing, not backing as in backing. I mean, a financial understanding of a company, a fundamental analysis of the company. As a normal layman, you will actually view these companies as per your consumption pattern. So if you are a consumer of Zara or a Westside or a Zudio, by default, this would be a go-to brand. So I wanted to check with you. You said that yes, if you have purchased these counters from these brands, then yes, Trent is doing well. In the next 12 to 18 months, Trent is doing well. What are you wearing? Zara, Westside?
Not that rich to wear Zara, sorry. I usually go to Raymond's or Westside or pantaloons. That's it.
Oh, that's because you're driving Creta, isn't it? So,
We should also check with Jatin actually.
Jatin, what's your view then? Are you also a consumer of any of these chains?
Not at this point of time. I generally go for my traditional formal wear. So I generally go to this Raymond, most probably because these are good formal wear at affordable rates. So I think I'll stick to Raymond as of now.
All right, so it looks like consensus also is towards
Raymond's.
Raymond, isn't it?
Yes,
At this
both
point
fundamental and technical
both
aligning
fundamental
towards
aligning towards Raymond. But yes, so that is the take coming in on these counters. But let me take this next query then. And moving away from the consumption pattern, let's talk about AB Financial, AB Capital and Geo Financial. We have Gautam who's writing to us from Mumbai, 5,000 shares of AB Capital at 218. He also has Geo Financials, or he's looking to buy Geo Financials. So what is your take, Rajesh? Switch out of AB Capital, put that money in Geo Financial, or stay put with whatever you have right now?
Both are good companies. Stay put with AB Capital, having a whole lot of products under his umbrella, doing very well. But we have a very strong buy call on Geo Financials as well. The company has started doing well, done tie-ups with BlackRock. They're moving into loan disbursal. They have treasury holdings of Reliance. Everything is in their favor. Somebody having a time horizon of at least 4 or 5 years because most of the operations are going to start. They have large plans, hired a lot of good names from the industry under their belt. So somebody having a very long period, by very long, I mean at least 4 or 5 years, one can go for Geo.
Venkatesh from Hyderabad is writing in to ask about 3 stocks actually, Ircon, NLC India and Crompton Consumer at current price. What should he do? Give a recommendation at this level. Rajesh, I want to start with you.
See, Crompton, I think we have discussed already that the company has been doing very well into not only in the fan space, but also the mixer grinder space. I think you're talking about Crompton CG or Crompton Limited?
Crompton Consumer.
Tushar?
Ankur, it is Ankur and it is Crompton Consumer. Crompton is the counter that he's asking you about.
Not consumer, right?
Yes.
So they have been doing, as I said earlier also, that the company has been doing very well, not only the entire FMEG space, I would say, the entire fans or mixer grinder, the market leader, good distribution network, adding new distributors at this point of time. So, and the demand is going up. So that's a good buy from our side. And the other one you said, which one? NLC, right?
NLC India,
NLC.
Crompton and Ircon is the ask from Venkatesh. He
Correct.
wants both of you to work little more.
Yeah. So Crompton is a buy from a side. Ircon again is a good railway stock that has been doing very well in the last 2-3 days. And with the kind of correction the entire space has taken in the last 1 year or so, I think there are a lot of steam left. Maybe a target of 210, 220 is quite possible in Ircon. NLC is a good buy, not only because of the kind of niglite capacity they have, the power sector they have, they give out good dividends. So at least a target of 290, 300 could be taken for NLC in the next 1 year.
All right, so those are the counters, but paucity of time, Jatin, apologies, we'll not be able to take your view on these 3 counters. But on that note, thank you so much, Jatin, as well as Rajesh, for being a part of the show and also being a sport on the show, answering all the tricky questions, not by the viewers, but by the anchors of the show. Thank you so much, Rajesh, as well as Jatin, for being a sport and being a part of the show. On that note, it's a goodbye from Ankur, myself, and the team that put the show together. Thank you so much for watching. Stay tuned. Markets at Noon coming up next.